Good morning, hello and welcome to Trading Hour. I'm Surabhi Upadhyay and with me is Hormuz in the studios right here. It's a red screen, but it was expected. Hormuz, the good news, however, is that there is a recovery from the lows. The gap down wasn't unexpected. Now, can we fight back is the question.
There came a dip and the dip was bought into, unlike Friday when the dip was not bought into. And that's good news, good going for the markets. It was almost 22,250 is where we fell to on the Nifty. And now we are back at 22,400. So it's the bulls can take a lot of heart from that. And it was not completely unexpected that we were going to open gap down. We opened gap down, we went further down. And now we are seeing this recovery that is coming in. We pull up the Nifty Bank as well. And that also fell around 500 points on Friday and it opened lower in today's session as well. And there you can see the Nifty Bank also not much compared to the Nifty, but still down 1%, 450 points lower, fighting to hold that 48,000 mark. But two indices specifically that I want to highlight. One is the PSU Bank Index and one is the Realty Index, because both of these indices at the start of trade were down almost 2.5%. And there you can see the recovery now. The Nifty PSU Bank Index is now just 1.3% down. The Realty Index, though, has recovered almost everything that it lost. 2.5%. It was lower at one point. Now it's down only 0.7%. So realty stocks, well, every dip is getting bought into, and as is the case with PSU banks.
Absolutely. So, I mean, that's the recovery that we are tracking, right? Just coming back to the large cap screen today, the bulls will thank, Reliance for at least playing some part, because Reliance is the one pillar. If you're looking at the heavyweights, it's the one that's been doing bulk of the firefighting and some of the heavy lifting. Then some of the other commodities remains a very, very strong theme. And we'll talk more about that as we go forward. Metals, crude, of course, with whatever is happening in West Asia. So commodities remain a focal point, and some of the equity plays on commodities like Hindalco, ONGC, JSW Steel, these are stocks that are moving higher. So yeah, we'll talk more about Brent dynamics as we go along. But I just want to talk about IT and what TCS leaves us with, or where we stand post TCS. And I think the market's read-through is that, yes, it was a great margin beat. TCS has touched its dream, band of 26 to 28%. The commentary is not lighting up the charts. If you look at the year as a whole, then growth is still anemic. You're talking about low single digits. The company is saying FY25 is going to be better, but it's not quantifying just how much better, whether it'll be, in the first half, second half, back-ended, front-ended. I think the TCS commentary today remained on the conservative side, which is why that rub-off effect on the fact that they've had great deal wins, great signings in Q4, the fact that margins have done so much better, that's not rubbing off. That's TCS. Pull up the rest of the pack as well, Infosys, Wipro. I mean, all of your large cap technology not exactly lit up after the TCS Q4 show.
And they're known to be conservative, right? Even the management, when they spoke to both Rima and Prashant, even they were highlighting that, yes, deal wins have been strong. But then there is still this bit of uncertainty as to what is the kind of framework that the clients wish to choose. And even when the AI aspect, when they mentioned that the clients would still take a few quarters before they actually understand what they want to do. But nonetheless, the 900 million pipeline was an impressive figure. Pipeline. And brokerages also, most of them have been positive.
Brokerages have been positive. I think the one other missing piece is North America and BFSI, and we know that's a huge engine for Indian IT services companies, right? And that engine is not fired for TCS in Q4, and they're not immediately guiding also. There was no statement that said that, okay, come Q1 or Q2, we're expecting BFSI to start boosting higher once again. That was missing in the commentary. So North America and BFSI are a bit of the a missing piece of the puzzle. In fact, let's actually talk more about this, and who better than Rima to come in and give us more color on the numbers and, more importantly, the interpretation. What is the street's view after we have heard from TCS today? Rima, over to you.
Thanks so much for that. So let me just quickly summarize the numbers. On the top line, the company's delivered a 1.1% revenue growth. Margins are a big beat, as you guys said, 26% higher than consensus expectation, and $13.2 billion in terms of a total contract value, new and renewal in this quarter, which is a current record high. Now, the stock has done very well. Year to date, TCS stock price is up 6%, outperforming the Nifty IT index, which is down 1.5% to 2%. Now, post the numbers, JP Morgan has upgraded the stock to an overweight, and one of the key reasons they've said is that this company will do better than large cap IT companies on the top line. Kotak too has raised the target price to 4,300. In terms of numbers, they're saying FY24, the company did 3.5% top line growth. In FY25, that number goes up to 7.2% and 6.3% in FY26. So growth picks up. And one of the big drivers for TCS's growth picking up in the coming year is the large deal wins that they won, whether it's Aviva, BSNL, JLR. all these will ramp up and contribute to growth in the coming year. They also go on to say that margins will expand in FY25. Morgan Stanley has lowered the top-line revenue growth forecast for next year to 5.8%, but margin estimates have gone up, and therefore there is an EPS upgrade. Goldman, UBS, HSBC are all bullish on TCS, and they've got a buy rating. Back to you.
Interesting, because even the management, when they spoke to them, both Rima and Prashant, they also said that the BFSI, there's nothing fundamentally wrong with the BFSI segment, but the clients are still in a bit of a wait and watch mode. There's $4.5 billion in deal wins for the BFSI segment among 13.1 billion that they won during the quarter. The stock is also being extremely volatile. At one point was up almost 1%, started off completely flat, now is down 0.3%, has given up almost everything that it gained at the start of the trading session. But let's listen in from the management, the TCI CEO K. Krithivasan and CEO N. Ganpati Subramaniam, and they spoke to Rima and Prashant on the quarter gone by and the growth that they see going ahead. Listen in.
We were able to improve our margin by close to 100 bips, and deal wins were all-time high. So all in all, a very satisfying quarter.
What was your own internal expectation of growth?
We would have been happy around 1.5%.
1.5%. And where has the miss come in compared to your own expectations? You said certain geographies did well, better than expected, certain did not. So vertically and geographically, if you could tell us.
See, North America was very flattish. Maybe North America were expected slightly more. That could have, because North America being a big geography, even a few percentage points better than what we delivered North America could have tilted it.
Is 2024 looking better? I mean, is it looking like it's picking
For us,
up?
FY24 is over.
Okay. No, the calendar, I mean. No, FY is over, but calendar is in front of you.
See, as we've been saying, we expect FY25 to be better than FY24.
Okay. How much better? I mean, are you getting confidence to kind of put some numbers in the ballpark?
That will be too early to call at this time. This year has been very different. Like, we've not been able to make a particular... see, people are making decisions at very short notices. So that would be a different call to make at this time.
And just the US market, right? Just because that's the big one. That's doing just fine. I mean, you get the numbers, the data points, the economic data points, jobs number, we got the inflation number. I mean, the problem there is that they want things to slow down. It's not slowing down. And but it's not translating into orders and sort of spending decisions being quick and firm. Why is that in your opinion, and do you think it'll pick up?
So I think, you know, what everybody is looking at it is, okay, let's look at the war, let's look at what's going to happen in the Middle East, what's happening in the Ukraine side. Almost all major markets, if you look at it, there is an election, right? So let's see how these things pan out, and should we really invest in Asia, should we really invest in North America itself, right? So many variations that are going through our customers' minds, which actually is the only reason that I can put in terms of explaining why they are holding back some of this. At the same time, the AI as a centerpiece, the architectures are changing, right? And they want to make sure that the architecture that they choose and a multi-cloud strategy that they choose and the resilience that they want to bring into the overall technology, all that, they want to probably assess and make sure they get it right, before they step up the gas.
That is delaying things.
I think so. I think, you know, basically there is a first phase of any new technology transformation, if you look at it, getting the architecture right. And have we got the multi-cloud strategies right? Is there a scope for a private cloud in the overall multi-cloud strategy? How do we use the LLMs? And what part of my data that I don't mind sharing it outside? What point of data and what part of the competitive advantage that I want to keep it inside? See, there are multiple things at play.
On just to press another point on AI, because that's a big thing which is happening, right? And everything is in a flux, as I think if I paraphrase what NGS told us. Is it a net? How far out from when we are able to kind of sort of start talking about projects on that side? When does it become a net positive? When does it stop delaying projects, and how far out are we, you think?
See, like, there are a lot of experiments going on, a lot of exploratory work going on. Like, as of today, I believe we are doing close to about 200 plus engagements, and our pipeline on this one is close to 900 million AI plus Gen AI together. So there is a lot of activity going on. And as like with any other hype cycle, there will be some realization on what is the art of possible here, what you should do with Gen A, what you should not try to do with Gen A, because it's fairly a compute intense technology. It's not going to come cheap. People also try to understand how expensive it is or where are the economic benefits. It will probably take few more quarters, right, for them to understand which are the appropriate use cases for this technology.
Just to get the number right, $900 million is the pipeline
yeah.
for AI and generative
Correct,
AI.
yeah.
And what about BFSI? BFSI is still flat. The last time we spoke, I think there was hope that there are green shoots in BFSI and will start improving.
I think, overall the deal momentum is there. We have done close to about 4.5 billion out of the overall 13 plus billion is from BFSI, right? But as I said, BFSI is one of the segments which is very quick to adopt technology, which is the one which tries out everything new. In that context, I think the artificial intelligence, multi-cloud, and things like sustainable financing, Basel III kind of experimentation that they have to do. Many such areas is something that we are participating. But then all this the momentum will pick up as they finalize the first phase of saying that this is how I want to do things. This is the way that it has to be, let's say, disaggregated, or this is the way that it has to be aggregated for dashboards and MIS purposes and all of that. So I think there's nothing wrong which we see in our customer base. We are engaging with them very positively, but there is a certain amount of caution in terms of, look, where is it the geopolitical risks are going, and where the technology side of it, how am I going to actually get it right? Because every time they do, when they accelerate it, if something new happens, the question comes back saying that, have you made the right decision on the architecture, right? Okay. So I think that's the way that I think there are some delays, but overall I don't see anything wrong with the banking financial services sector.
Nothing wrong with the banking and financial services sector. That's the major takeaway there from the TCS CEO. The BFSI, remember, is the biggest contributor to TCS's revenue in terms of segments and reacting to TCS's performance in the fourth quarter. Let's also listen in to what Andrew Holland makes of the numbers and what it means for the sector as a whole. Listen in.
The results were good, actually, I think if you think about all the headwinds they have, I thought it was a very good set of results. I think if TCS is a kind of the bellwether for what we can expect from other companies, then I think you'll see a lot more interest towards this sector.
Okay, so that was Andrew talking about TCS. Let's actually take a quick break on that note. But before we do that, markets have been under pressure right from the morning. So here's some more opinion coming in from Andrew Holland on the overall market outlook and, of course, the sectors that he likes at the moment.
It's not really such a big fall, for those markets, and you're seeing the same in Europe as well. It's not, if anything, I would just say it's just taking some money off the table. Given that it's just 1% or 1.5% falls, it's not significant. Everyone's been kind of wondering, when should we get in? What's the timing? Should we wait? And then these opportunities come along, and I think it's a good time to be kind of dipping back into the markets. If I take that the funding goes through, this is good news for the whole sector. And I think with the government there, I think it will likely go through as well. And thereafter the elections, I think you'll start to see tariff increases as well. So I think I think overall for the sectors probably poised for an upturn from where we are. So this I think will give confidence to investors in the players in the telecom market. So I think it's going to be good news. I don't see it as being bad news. Yeah, I'd probably look more at the auto components. I think I'm going to wait to see what Tesla comes out with, but I think that could have a good fill-up for the auto component sector going forward. I think that's the way I'd want to play autos at the moment. I think a lot of it's in the price for the main players. So I think the auto components is where I'd be looking to put more exposure at this point of time.
Welcome back. Here with us on Trading Hour, and it is time to talk commodities because commodities have been on a tear over the past many weeks. We've been telling you that. Manisha is joining in, and today she has her eye on aluminum. Manisha, I remember last week you were talking about a bit of a breakout and prices shooting higher. What is happening now?
Oh, well, yes. The fundamentals have been on the stronger side for some time now because Guinea, which is where you get alumina from, has been facing some supply disruptions because of fire at facilities there. That has been supportive. And then we've seen strong buying come in from China as well. 5% of gains. Aluminum clearly is outperforming the metals at this point in time, while we have seen 1 to 5% of a jump come in across board here as well. The latest trigger for aluminum has been the news from US and UK, where they have prohibited metals from Russia into their exchanges. So CME and LME are the two top trading exchanges in the world when it comes to metals. And if they're not going to take delivery of Russian metals, that means, or that tells you that you could be looking at lower deliveries then. Both countries also have stopped importing metals from Russia as well. So that could be a bit of a concern. If you look at on the exchanges itself, on LME itself, the Russian delivered metals are much on the higher side in sense of percentage there. So for aluminum, 91% of aluminum that you have on LME is Russian. 62% of copper is Russian. Even 39% of nickel comes in from Russia in sense of deliverables on these exchanges. So that metal perhaps will start to continue to decline. That is where you have seen the aluminum prices gain up on. The other reason is Japan seems to be buying aluminum on a much higher premium as of now. So until the first quarter of this year, they were paying a premium of around $70. Now it has been jumped up to $145 to $160 per ton. So Japan is looking at higher supplies. The premium has been on the higher side. Asian markets are tighter when you look at aluminum. And all of these factors tell you that aluminum prices from here on as well can surge higher.
And that's showing in the stock prices of a lot of these stocks as well. Thanks a lot, Manisha, for joining in. Well, Hindalco is the top Nifty gainer in today's session now, up to 4% at the start of the show. JSW Steel is also featuring in the list of gainers on the Nifty. There are very few of them. So Hindalco and JSW Steel among the Nifty gainers today, and the recovering from the lows of the day as well. There you can see 3.5% higher for Hindalco and JSW Steel as well, trading in positive territory on the back of these metal prices. But also the other commodity that is in focus is crude oil, and oil prices have been more or less stable at around $90 a barrel despite all the geopolitical tensions that happened over the weekend between Israel and Iran, and then the escalation, and then now there is no further escalation that is expected from both parties. My colleague Sonal is joining in now with a quick view on India's crude basket, the trends in Russian imports and India's key oil exporters, and a lot more. Sonal, take it away.
Thank you so much for that. Well, yes, the buzzword is crude oil prices, Iran and geopolitical tensions. So I just thought let's take a look at what the crude basket is looking like right now. Because usually when we talk about wars, crude is one of the commodities that sees the maximum impact. So there is a note by Kotak Institutional Equities, and they talk about how share of Russian crude in Indian crude basket has continuously increased. It is now 37% if we look at the 9-month picture. Imports from most other larger exporters to India have declined, and Russian exports have increased. India's crude imports from few countries that are not traditional exporters, the likes of Korea, Turkey and Greece. These have also become big exporters to India in terms of crude exports. Now let's talk about all these countries in detail. For Russia, it has increased from 2% in FY22 to 37% in 9 months of FY24. Iraq has seen a decline from 25.5% to 21.3%. Saudi too has seen a decline from 17.7% to 14.3%. We have the other countries like UAE, there's USA, where also we have seen a decline. If we talk about Korea, that's a surprise entrant here. From 0%, now we are importing around 2.3% of the total crude that we do. There's Greece as well, which has increased from 0 to just 0.4%. But these are some new names in the basket. Turkey is the other one, from 0.2% to 0.6%, and others, the other countries that we import from, that has declined from 15.2% to 5.8%. Now, we were having a conversation with ICICI Securities early in the morning as well, and they indicated that the imports from Iran in terms of crude are not much. Yes, Iran produces 3 million barrels per day of oil. Their gas production is the third largest in the world. However, the exports are not so much, just 3% globally versus the production they actually have. So it does not look like much of an impact that it will have on the crude basket for India and globally as well.
Okay, got that. Good to know. Thanks very much, Sonal. The fact that we're sort of de-risking and diversifying our crude basket. So that's pretty interesting. And indeed, Korea's entry in the basket also something to take note of. Let's take a break on that note. We'll come back on the other side and discuss technicals. Soni Patnaik from JM Financial Services will join in with some trading ideas.
Back with us here on Trading Hour, and let's throw the spotlight on some buzzing stocks this morning, and one of them is Senco Gold, and that is shining bright, pun intended. It's up over 15% after reporting 17% now, and that is the biggest single day gain since its listing after its fourth quarter business update. Mangalam is joining in with the details. Mangalam, what's causing the sharp surge this morning?
Well, shining bright and glittering, if I was to add to your adjective, Hormaz, it's doing well. The reason why it's doing well is because it's reported 39% revenue growth in the fourth quarter. Now, one would say, there is consumption weakness and jewelry stocks are the only ones which are doing well. Jewelry companies are the only ones which are seeing sales. In that as well, Senco Gold has actually gone ahead and done better than two of the companies that have reported their updates. One on a very high base, Titan, their India business grew by about 19%. And then you had Kalyan Jewellers, their India business also grew at around 38%. So one could argue that on a lower base, the growth is much higher, but higher it is, 39%. That's not all. It's backed by same-store sales growth, 23% same-store sales growth in the fourth quarter. And it's also seen higher share of revenue coming in from jewelry, which has stones studded on it. And that's important because studded jewelry typically gives higher margins than just plain gold jewelry. So those are functions which make the numbers look good, and the reported numbers as well. You're likely to see margin expansion. Add to that, they've added the highest number of stores that they have in this fiscal, 23 stores. And the volume growth for this year as well. Gold has been 13% higher, diamond has been 19% higher. And the FY25 start has been pretty good as per the company. In their press release, they're saying that, strong sales seen in the recent festive season that concluded. And then we also have Akshaya Tritiya and wedding gold demand and wedding season, which will come by in the first quarter and the start of the second quarter. All these factors doing well for Senco Gold. And also, remember, the spike that we're seeing in gold prices typically favors the organized players versus the unorganized players.
Okay, got that. Mangalam, Senco Gold, indeed a very, very interesting trend. Some of these recent gold jewelers that have listed, jewelers that have listed, they've done really well. I was checking Kalyan. Kalyan really was the stock of the last sort of 1 year, stock of 2023. You can imagine. Pull up a 1 year of Kalyan. Senco doesn't have a 1 year history because obviously it's a more recent listing. But this year, in calendar year 24, Senco has actually overtaken Kalyan. So Kalyan had a dream run all through last 12 months. Now pull up, let's do year-to-date Kalyan and Senco. And that's where Senco is actually stealing the march with a year-to-date gain of about 35%. So some of the new jewelers really lighting up and keeping things very bright and sparkly.
Sparkly indeed. And there you can see that Senco Gold 18% higher now. I guess all of that has come today in today's trading session.
It was actually flat, coming to think of it.
And then comes a 17% move, and in one day it's overtaken Kalyan Jewellers. A brilliant move there on Senco Gold. Now it's nearing 951, and if it gets to 951, it'll be 3x from its IPO price, which was 317 rupees. So great going for Senco Gold in today's session. But the other stock on our radar is Anand Rathi Wealth. It opened lower and has recovered all the losses and is now trading with extremely healthy gains after its fourth quarter results. The company also exceeded its FY24 guidance in terms of revenue and net profit. Vamakshi is here to give us more details. Vamakshi, the stock doing very well in today's session.
Well, absolutely, Ormas. The stock is trading higher today, and that is because a good set was reported by the company. When we look at the FY24 guidance, the company, like you rightly pointed out, has managed to surpass its revenue as well as net profit guidance. In fact, just to add to that, the company had already exceeded its AUM guidance in the first 9 months of FY24 itself. Average AUM yield has remained flat, however, on a year-on-year basis and sequentially at 1.5%. But in absolute terms, the revenue from operations has managed to grow by almost 29%. Trail revenue, which accounted for nearly 37% of the total revenue, managed to grow by almost 63% on a year-on-year basis, and the management aims to take this number to almost 50% going forward. Net profit also saw an uptick of almost 33%, standing at 57 crores for the fourth quarter. Net inflows were up 41% on a year-on-year basis, but equity MF flows dropped to almost 27%, and the company attributed to the fact that a small cap scheme was taken out of the model portfolio. Apart from that, the operational metrics also look quite healthy. Active client families are up almost 19%, and AUM per RM has also seen an improvement of almost 35%. Moreover, in addition to the positive numbers that the company posted, they've approved a proposal to buy back nearly 0.88% equity. The total buyback amount, the maximum of which will be 165 crores, and this is coming in at a premium of almost 10% to the closing price that we saw on Friday. Moreover, going ahead, the management management aspires to add 200 clients per month. In fact, they've gone ahead and given a guidance for FY25, which implies nearly 20 to 25% growth, with revenue guidance of 910 crores, PAT guidance of 280 crores, and AUM guidance of 72,000 crores.
Thanks a lot, Vamakshi. There are interesting numbers from Anand Rathi Wealth. The stock is up 3%. They also announced a buyback at 4,500 rupees. The premium leaves a little to be desired in today. There, 4,500 was the buyback price. It's already at 41.25. But the stock has seen a stellar move. The 550 was its IPO price, 9x now from its IPO price. So great going for Anand Rathi as well. The other stock in focus today is Aster DM, and the stock is up because the board approved a special dividend of 118 rupees a share. Ekta is here to tell us more. Ekta, over to you.
Yes, absolutely. Aster DM is in focus because they've approved that special dividend of around 118 odd rupees per share. That is after they sold their Gulf business for over $907 million. So that's what they've netted post the transaction. And the company, remember, had indicated that this special dividend would be between 110 to 120 odd rupees. So it's at the higher end of that particular range. And that's probably what the street likes. Record date is April 23rd. The board is not going to consider an interim dividend now, but they may consider a final dividend in their Q4 board meet. Now, the company says that 80% of the proceeds that they've received will be used for special dividends. So I think the street likes the fact that they have rewarded shareholders quite handsomely. 1,050 crores will be retained by the company. They will decide how to utilize that 1,050 crores. Most of the hospitals for them are now mature, and hence cash flows are coming through. So that's an additional positive. Now, remember, promoters have a huge amount of pledge in the company itself, but they do have plans on reducing it. The management did mention that the promoter pledge will reduce soon. We don't know to what extent and by when. They are open to expansion in terms of inorganic route as well. So totally, they're looking to expand their bed count to 6,600 in the next couple of years, and probably take it to 10,000 in the next 5 years. They want to become one of the top 3 integrated healthcare companies in India. So that's their aim. They're looking to expand beyond their core south market. So they're looking to expand in Maharashtra and UP, etc. Now, remember that Olympus had sold a certain amount of stake in the company, around 10%. They have 10% left. They said that it was picked up by FIIs and DIIs. And currently, Olympus is retaining that 10% stake. They're growing at 25% CAGR, hoping to grow around 15% CAGR in the next 3 to 5 years.
Okay, Ekta, got that. Thank you very much for that. That's Aster DM, and reasons why that stock is also higher in trade today. Soni Patnaik is joining us now. She's from JM Financial Services. Soni, great to have you on the show. So we definitely want to talk Nifty, Bank Nifty, and overall trading calls. But before that, in case you track any of these stocks that we've been discussing, they're all in news today. Senco, which is higher because of the Q4 updates that have come through. Then there is Anand Rathi, and the latest one is Aster DM. Any take on these stocks? Do you like any? Do you see a trade in either of the three?
Hi, good morning, Surabhi. Thank you so much for having me on the show. So if you talk about Senco, there's a strong price volume action breakout today. Breakout has come above 860, and the stock is comfortably trading above 900. Crucial support is definitely at around 860. The stock can test higher levels of 1,000, 1,020 also on a positional basis. Any declines towards 900 can be a good level to reinitiate longs and keep your targets for 1,000, 1,020. If you talk about Anand Rathi also has seen a decent engulfing bullish candle pattern today with this good volumes. If it manages to close above 4090 today, you can see the continuation in this further uptrend. It can test higher levels of 4300, 4350 also. I think there's very strong support around 4090, 4080 that can be seen on charts today. And the third stock of Aster DM also, it opened with a good breakout today. It has given away those breakout levels, but it's still holding very crucially above 500, which is a very strong support. If it manages to hold above 500, it may face some resistance around 550, 560, but the further upside can be seen only once it's taken out these further resistance. And above that, it can test 600 plus levels.
Very interesting. But Soni, what's your view on the index? It's been very choppy since the morning. We opened lower, gap down, extended those losses, recovered from 22,250, now around 22,350. What's your call on the index and the Nifty Bank? And also couple that with your specific stock recommendations this morning.
Good morning, Harmaz. See, Nifty, we saw that the gap down happened and it tested a low of 22,200. So that level is a very strong support. I think 22,200, 22,000, that range itself can act as a good cushion in any of these volatile swings that can be seen for Nifty. As long as this support resistance, this support zone is actually getting defended, it can remain in a sideways trend from those 22,200 to 22,600, 22,700 on the upside. So there's this resistance also, and any further upside can only be seen only the resistance level is getting crossed. The important parameter to remember here is that FI's positioning and FNO positioning, it has, we've seen that they have dramatically increased from 43% longs to 59% longs, and it's just been only 3 days where these longs are continuing above 50%. So I think it's just a good opportunity. These declines, these dips that can be seen in Nifty, it can be like, a good opportunity to reinitiate the longs, keeping a stop loss of 22,000 on a positional basis. Definitely the index can bounce towards 22,600. Similarly for Bank Nifty, 48,000 is a good support. It's just loitering around those support levels. So maybe 47,500 can be a good support. And, just as long as it's not breaking below 47,500, Bank Nifty can bounce towards 49,000 once again. So I think it's for Nifty, Bank Nifty, both can be a buy and decline. A broader outlook is still positive. Talking about stock specific, the first stock would be in ONGC. We've seen good long built positions today, and there's a very strong breakout on charts as well. So keeping a stop loss of 268, ONGC can be bought at current levels for targets of 290. The second stock pick would be from the metal space. Very strong momentum today. We've seen Coal India coming out with good short covering positions now. So Coal India futures can be bought at current level, keeping a stop loss of 440 and target of 470, 475.
Okay, all right, got that. Thanks very much, Sony, for all of the trades today and the advice. You have a good day. We look forward to connecting again. Do have to take a short break. On that note, we'll come back on the other side and talk fundamentals. Amit Khurana of Dolat Capital will join in. Welcome back. So the midcap market is still reeling under some pressure, still down 1% on the midcap index, and the advance decline ratio is also still poor. Not much recovery there, just about 1,900 stocks that are declining and about 370 that are advancing. Let's talk about some of the movers and shakers on the midcap screen. Apart from the nifty names on the commodity side, stocks like Nalco also are having a good session today. Manisha was just telling us about the rise in aluminum prices, and that seems to be working well for this counter. Vodafone Idea has managed to put on 2% after, and this is on good volumes, of course, this is price and volume action. This obviously after the infusion of equities coming through from promoters. So that's a stock on the radar as well. Now, let's get you a big call on the market, and this is coming in from Rhythm Desai, and it's worth noting. He's saying in temporal terms, this market is aging, but it is still young in terms of returns, especially because we see some distance for the earnings cycle to go, driven by some surprising changes underway in India. Therefore, this is said to be India's longest and best bull market ever. Stay invested. That is a view coming in from Rhythm Desai of Morgan Stanley. That was, of course, the equity call of the morning. Let's now take the conversation forward. We have Amit Khurana joining in, head of equities at Dolat Capital. Amit, I don't want to put one against the other, but since we were just reading out that big call from Morgan Stanley, let me start there. I mean, do you concur that this bull charge still has more legs and that every dip, like the one perhaps that we're seeing today and on Friday, that all these dips should be bought?
Well, yeah, I mean, completely agree with that. I think what we are undergoing is a very significant structural shift on India economy, a very structural shift on the corporate balance sheets, part of which is already reflecting the valuations, the way India has outperformed and every dip has been sort of bought into. So big picture, completely agree, except the caveat that you will have bouts of profit booking, one, and bouts of volatility, which will challenge these assumptions. And of course, as the developments on the global earnings, global macros, India earnings play out, there will be reallocation of weightages that you may want to do on the portfolio or on the stocks. which will be a more active sort of style of managing the portfolios and expected returns. So I think leave alone that part, largely the direction, I think from a 12 to 18 months perspective for India equities continues to be constructive in our view as well.
You know, Amit, you mentioned global, and one sector that is reacting at the extremes to the global developments is metals. With all the restrictions over the Russian metal imports on the LME, the stocks have been shooting through the roof over the last fortnight or the last month or so. But there will come a time when this situation will normalize as well. Now, do you see this entire sector just as a trading play, or has there something that has been a fundamental shift in a lot of such stocks? And if so, which among the ferrous or the non-ferrous names that do you prefer within this metals basket?
Well, yeah, so let me qualify that. I think it is more of a tactical play. That was our view. Even before this news flow came out, we have been pushing metal stocks purely from a tactical perspective. Whether it becomes a structural play, I think will depend upon the demand outlook. Remember, you still have a situation wherein demand outlook for some of these segments has not been as bullish as usually you would have expected in a global growth scenario that we are in, where US is doing pretty well. You have most of the emerging markets in a mixed picture, and India domestic demand has been pretty robust. Now, it will all depend upon how the next 6 to 12 months of outlook on the demand scenario works out. Our take is that one should be playing more on the non-ferrous, given the news flow on aluminium, which relatively was an underperformer if you look at it in the last couple of years. The ferrous sector had outperformed pretty well. But from now onwards, given the news flow and purely from a tactical perspective, it seems to us that the non-ferrous will be the space to watch out for.
Right. I want to talk to you about these gold financing or gold proxy plays as well, right? Not necessarily gold financing, but Titan, Kalyan, Senco, all of them came out with business updates recently. Senco is on a tear right now after the business update that it put out. Kalyan also saw 30% plus revenue growth there. Do you find value in any of these three names? Titan, as always, has been an expensive stock, but does these kind of levels or this kind of growth justify the kind of valuations it's trading at, or would you wait for a correction before you even turn positive on these names?
Well, there are two ways to look at it. So let me put that in context. I think the numbers that we are witnessing are Q4 numbers, and the gold prices have gone up very sharply towards the end of the quarter. I think the ramification of that higher price impacting demand will play out in Q1. And to what extent it plays out, we have to see. Our sense is that the companies will be more guarded in their earnings commentary when they put out those earnings formally and they talk to the investors at large. We sense there will be a bit of a caution over there. We haven't yet seen the footfalls falling to that extent. And of course, Akshaya Tritiya, which falls in the month of May, will probably offer some evidence as to how much of an impact on real demand it has made. But I think it is time to be a little cautious, because there tends to be a little bit of a readjustment on the consumer side. People tend to have fixed budgets. So the grammages tend to go down when there is a certain spurt in these prices for gold and other precious metals. Wedding season still continues to be pretty strong. So we will have to see, but my sense is it is better to be cautious at these valuations and wait as to how the higher levels of prices impact the volume throughput, which is probably more relevant for the companies to drive earnings and valuations.
Speaking of metals, let's move from precious to actual base metals, right? There's been such a roaring rally. This year, the Nifty Metal Index, Amit, is up some, I think, 19-20%. And this is on the back of a strong 12-month period in any case. Have you participated in the metals move? Would you still ride it, still join it? What's the advice?
Yeah, we did. We did the point I was making earlier. We were more bullish on the ferrous side earlier, but given the latest development, it seems non-ferrous will probably do a catch-up. Remember, this large part of the outperformance on metals was a slightly contrarian. It was pretty skeptical. And it was largely driven by domestic names. It was only later that the sort of the more diversified names caught up. But you look at the domestic names; they have done pretty well, largely led by the domestic demand. So I think it will continue to be tactically an opportunity to play out, and more on the non-ferrous side, as I see from here on.
Pleasure speaking with you as always, Amit. Thanks a lot for joining in and sparing time and sharing your views on the markets and the sectors that you like or you don't as well. Thanks a lot for joining in. That was Amit Khurana from Dolat Capital. Time for a short break here on Trading Hour. On the other side, we bring you excerpts from our special offering, Market Cafe, where Ashok Wadhwa from Ambit Capital discusses the centre's latest move to amend its tax treaty with Mauritius. Stay tuned. We'll be right back.
Welcome back. Here with us on Trading Hour. Now, India has moved to amend its double taxation avoidance agreement with Mauritius by including a principal purpose test, or PPT, in the bilateral treaty. The PPT will determine if third country resident investors based out of Mauritius have a genuine case to get capital gains tax benefits on the investments that they're making in India. Market and tax circles, of course, all through late last week were abuzz with the debate on whether this amendment will impact investments that were originally grandfathered by the May 2016 amendment to the treaty. I caught up with Ashok Wadhwa, Group CEO, Ambit Private Limited, as part of our special offering Market Cafe, to get his take on this interpretation of the latest amendment and the potential impact if indeed it applies to pre-April 17 investments. FPI is coming from Mauritius, the tax treaty is getting amended. And now I never thought I'd hear this whole conversation about grandfathered investments, whether they'll be taxed or not. What do you make of what suddenly happened?
Well, déjà vu. In some ways, India is an interesting place because we don't let anything sleep forever. We have the ability to wake up issues. The changes that are being suggested through this preamble that the government of India is signing with Mauritius is actually an age-old accepted global principle, right? When treaties were first signed, which are bilateral in nature, there was a clear understanding that treaties would be created for the benefit of residents and permanent residents of respective countries. Over a period of time, we've heard different terms called treaty abuse, treaty shopping, and governments across the globe have tried to introduce legislation to ensure that the treaty benefits are actually available to those for whom they were genuinely meant to begin with. This particular legislation is nothing else other than kind of creating a level field between the OECD model, the historical OECD model, which always has a clause called limitation of benefits. Limitation of benefits is exactly what our current PPT says, which is basically what is the principal reason for which you have created a company in Mauritius. My own view is that it's par for the course. The only challenge which I heard today as a debate on your own television was on whether it has the ability to be retroactive in nature. Again, my two bit on that is that when Mr. Jaitley introduced the 2016 budget and changed the Mauritius tax benefit, particularly on capital gains, I believe, and this is only my recollection at this point of time, I don't have the print in front of me, but I believe there was a clause or a clarification that was provided with the budget, which suggested that the 2017 and the 2019 amendments, bringing down the tax concession first to 50% and then to zero, literally, were related to investments made after that date. And should that be true, and should there be that clarification somewhere in the budget books, I think it should provide adequate evidence to say that even the preamble cannot be retroactive in nature, and that it should really only apply to investment made from the day the two countries have exchanged the notes and agreed to implement the new treaty.
Because the view that suddenly one is hearing from New Delhi is that it's not retrospective. Tax is levied at the time of sale when you're exiting that investment. And if you're going to exit an old investment after this amendment comes into effect, then perhaps there is a case to apply this principal purpose test.
It is, but if you look at the definition of retrospective, and that has been tested in India on several tax occasions, Vodafone being perhaps the most widely known one, it is always related to what was the legislation when I made the first principal decision. In this case, the first principal decision of making the investment. If the law on that day permitted me a particular concession, any withdrawal of that by a subsequent legislation is deemed to be retrospective in nature. So yes, I'm sure the revenue authorities will want to maximize tax collection and say that the transaction date becomes the date on which we have to read the legislation, whereas those who have suffering or those who made the investment prior to 2017 or before this change came in will always argue to say that anything which applies differently from the date I made the principal decision is retroactive in nature.
Hypothetical question, because the last word hasn't been said on this till we see the effective change, the amendment and the actual notification. But hypothetically, if this were to open up previous year's investment, pre-2017 investments for potential scrutiny, how damaging would it be? And in what way?
Well, it'll certainly be damaging from a credibility perspective because that's the one voice which has been very loud in global commercial markets to say that is India going to change its legislation retroactively to her decisions made at the previous time. So I think it will only give further emphasis to the fact that, retroactive changes can be made, which is not great for confidence when people are making these investments. And at a time when we are seeing so much interest and so much economic activity coming to India, perhaps not worthwhile.
All right, that was Ashok Vadva. He is someone who's a veteran from the tax world. And just a small caveat here that the amendment has been created, the protocol has been created, but as of now, it has not been notified. And the government's take is that the tax community as well as investors need to wait for the actual notification, and then a lot of these issues will be addressed by then. We will take a break on that note, come back on the other side and get you more on the markets. Welcome back here with us on Trading Hour. Now let's talk about what mutual funds have been doing in the last 1 month in terms of buying and selling the stocks that have found favor and the stocks that have fallen out of favor. Hormaz, what's the data telling us?
Big reshuffle. That is the bigger takeaway here, because that's also because of the large cap additions. If you see, there is the big name that they've added is Reliance and TCS. That's they've added. We're speaking about the shift to private sector banks for a very long time, and that reflects here as well, because Kotak and HDFC Bank, after the reaction that HDFC Bank has seen in that January to March period, in the month of March, mutual funds have increased their stake in HDFC Bank, as is Kotak Bank. But in terms of reductions also, there is a private bank where mutual funds have reduced stake, and that is ICICI Bank. And that shift from PSU to private banks also reflects because SBI is the top name in the large cap reduction space. So that is the large caps. Now, when it comes to mid caps, there are some interesting names there as well. Indus Towers is one that features there because the stock has had a stellar run in 2024. The stock is up 60% so far this year. The stock gained around 15% in the month of March itself on this hope that there will be recovery of dues from Vodafone Idea, so on and so forth. So Indus Towers, and on the flip side, a beaten down name like Jubilant FoodWorks, which is down around 20% this year so far. Their funds have increased their stake. Now, some top mid-cap reductions, if you see Ashok Leyland, APL Apollo, Ramco Cements, Sundaram Finance, and such names feature in the mid-cap reductions. Now, among the small-cap additions, if you see, Aster DM is one that's up and about in today's session as well. They announced a dividend recently. Aditya Birla Sun Life is one interesting name as well, where the funds have added stake. Now, Aditya Birla Sun Life AMC is an underperforming stock compared to all of its other peers. It's still trading below its IPO price. So that is one stock where the funds have added. Now, in the reductions bit, Amara Raja, Bata, we spoke about Amara Raja earlier on, where mutual funds had increased stake over the quarters. Now they have reduced stake in the month of March. Bata has been an underperformer. There they have reduced stake, and Carborundum Universal also features in that list. Some stocks where the mutual funds have exited completely. These are small cap names with Force Motors, JBM Auto, Associated Alcohol. So some names there as well. Now, and some interesting names that I want to highlight specifically, Tata Chemicals. We know what all happened with Tata Chemicals recently with the Tata Sons listing and the listing not happening. Quant and ICICI Prudential have bought stake in Tata Chemicals. The other one on the flip side where they have funds have exited is IREDA. Now, three funds, Nippon, Kotak, ICICI, have exited stake in IREDA, whereas they have funds have increased their stake in another PSU name like REC. So this is not part of this list, but REC, they have increased their stake there. Tata Technologies is another interesting name. It's well above its IPO price, but trading well below its listing price of 1,200 rupees. There also, Nippon and ICICI have exited their stake in March. The other name that comes up is an unknown name called Lancer Container Lines, and that is a stock with a 1,600 crore market cap. And there, Quant MF has entered with a 2.5% stake. This is evident from its March shareholding pattern as well. Now there is an FMCG shift that has taken place where Axis MF has exited HUL and instead increased its stake in Colgate-Palmolive. So there is one move there. HUL has been an underperformer all through and through 2023 and even in this year as well. And lastly, another interesting name is ICICI Securities, where Kotak and ICICI Prudential have both increased stake. The stock is about to delist. So it's pretty questionable as to why this has happened, but maybe because of the swap ratio and so on and so forth. So some interesting names there, but a big reshuffle in the month of March.
Oh, absolutely. Lots of shakers, movers and shakers, up and down both. Well, with that, we are completely out of time on this edition of Trading Hour. Thank you very much for watching. Do stay tuned. Halftime report coming up next.